Good morning to Madam Sharifa and fellow friends. I'm Lily, group representative of our group. Today, our group want to present about the overview of internal audit which we have learned from the last 2 weeks. Our group presentation will be started by Farah Alia, following by Shirley Ling Yinfen, King, and the last one is Ting Fang. Hope everyone can lend your ears to our presentation.
Hi everyone, my name is Farah Alia binti Zani, 63198. Okay, so I will present the introduction of internal auditing that we learned in the previous class, EBA4073. So, in the previous class, we learned about what is internal auditing, its role, and how it assists the external auditors. So, internal auditing is an appraisal activity that established within an entity as a service to the entity. We also know about the IPPF, which is the International Professional Practices Framework, a conceptual framework that organizes authoritative guidance that promoted by the IIA, the International Internal Auditor. It comprises attributes, performances, and implementation standards. We also learn about the Code of Ethics to promote an ethical culture in the profession of internal auditing. There are four principles of Code of Ethics, which are integrity, confidentiality, objectivity, and competency. Next is the evolution of internal auditing. The purpose is to understand the changing role of internal auditors. Until 1990s, the internal auditor focused on verifying the financial transaction and on assurance work. But over the year, the scope and extended into assessing controls, risk, and governance. Their roles now including the consultancy. So there are three eras of evolution that shown in the slide. First is pre-1990s, era of financial controls. Next in 1990s, era of business advisors. And the last one, 2004 and beyond, era of governance partners. Next is the objective, scope, and responsibilities of internal auditor. Their function is to provide an independent, objective assurance and consulting activity designed in order to add values to the organization's operation. Their scope and objective of the internal auditor is different between companies. It depends on the size and the structure of the company. They are essential in helping an organization accomplish its objective by systematic and disciplined approach. IA or internal auditor is one of the good corporate governance. There are four elements which are competent and ethical management, diligent BOD, audit committee, and independent external auditor. Table shows in the slide is the differences between internal and external auditor. So the internal auditor is determined by the management. Their target indicated by the requirement of the organizations. While an external auditor is designated to report independently the operating results and financial position that have been audited. Lastly is about there are two types of audit that internal auditor can be requested to do, which are operational audit and compliance audit. Operational audit is an assessment of operation of branch and department of organization. They will appoint an auditor to report whether the branch is operating effectively or efficiently. Next is compliance audit. It focuses on the procedure used, and the auditor need to determine whether the established procedure such as purchases, accounting, finance, cash management are compliant with.
What are the general tasks of the internal auditors? Internal auditors are employed by the companies to provide an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. They focus on the future events by helping the organization accomplish its objective by bringing a systematic and disciplined approach to evaluating and improving the effectiveness of risk management, control, and governance process. For example, they have to give recommendations on how to improve the governance controls in business. Besides, they have to be ready to respond to the needs and desires of all elements of management. At the same time, they have to ensure that the company's operations are complying with relevant laws and statutes by evaluating its business conductions. They have to examine validity and reliability of financial, accounting, and other data and report any deviations. They have to prevent and detect errors and frauds in any form or extent in any activity reviewed. They have to promote any and identify improper conduct to enhance the reliability of internal audit work. Furthermore, they have to assess the company risk and the efficacy of its risk management efforts. They have to review the work continually, to generate reports for the use of management, board of directors, and employees of the organization to enable them to get know on the efficiency of internal control from each department. They have to be able to communicate to the variety stakeholders regarding internal control of the business. They have to prepare the internal audit report to the external auditor for them expressing their audit opinion to the different users. We can say that internal auditors help the organization to succeed.
Hello everyone. Now I would like to talk about the importance of internal auditors for listed firms and what are the daily tasks of an internal auditor. Firms employ internal auditors to provide insight into an organization's culture, policies, procedures, and aids board and management oversight by verifying internal controls. To get started, let's look at the reasons why internal audit is necessary for listed firms. Internal auditors provide assurance on whether a company's risk management, governance, and internal control processes are operating effectively by evaluating and recommending ways to improve the effectiveness of a company's control processes. They report to the board of directors and senior management and are responsible to the company's management. This assists management to improve those controls and show shareholders and other stakeholders that they are managing the company effectively. Internal audit also ensures full compliance with any and all relevant laws and regulations. Full compliance with laws helps to gain client trust and avoid costly fines associated with non-compliance. Not being in compliance also means being unnecessarily high risk, which can lead to financial equity and market losses. The daily task performed by internal auditors is protecting the firm's assets from fraud and theft. Fraud can often lead to litigation, dismissal and recovery of assets. Therefore, internal auditors should have sufficient knowledge of fraud to identify red flags indicating fraud may have been committed. Understand the characteristics of fraud and the techniques used to commit fraud. Understand various fraud schemes. Evaluate the indicators of fraud and decide whether further action is necessary or whether an investigation should be recommended. Where fraud has occurred, internal audit should understand how the controls failed and identify opportunities for improvement. Another daily task of an internal auditor is to assist the management of risk. The types of risks are risk of bad reputation, health risk, safety risk, financial risk, and many more. Efficiency of risk management by internal auditor will affect the quality of risk management processes, systems of internal control, and corporate governance processes. Furthermore, internal auditors should also evaluate and make recommendations on ways to improve internal controls and governance processes. They also evaluate internal controls by interviewing management, interviewing employees, monitoring and reviewing the process, and lastly, running test controls. Management interviews allow auditors to understand the mindset of business owners and other managers in the company. This helps auditors to determine how close business owners and managers are to the company's frontline operation. Meanwhile, employee interview can determine how well business owners and managers educate employees on the importance of safeguarding business operations. Monitoring and reviewing processes can aid internal auditors to determine the effectiveness of each control in the company. Lastly, test controls relates to the company's financial accounting department as a rule. Auditors select a sample of information and test it against the company's standard operating procedures or national accounting standards. This process ensures employees are not abusing a company's financial information by committing fraud or embezzlement.
Next, we look at what if there is no internal audit in big organizations. The importance of having internal audits are they provide bigger and broader insights towards the risks the organizations are facing, especially when they're taking on new projects or new events. Secondly, internal audits also help to review the policies and procedures that the organizations are bound to comply, and they ensure that the organizations comply towards those policies and laws. And thirdly, internal audits also make reassurance and recommendations to organizations. So, for large organizations, complex transactions leads to greater risk. So this is where the internal audit would come into the picture. They focus on business and operational risks. They identify and understand risks that are faced by the organizations. They do this by implementing enterprise risk assessments. So, by analyzing all the risks that our organizations are facing, they consult the organizations on the risk consideration for the organization to make better decision. They ensure that of all the risks that organizations are facing, controls are being implemented. So this includes the risks that the organization face, not only the downside risk but also the upside risk. Next, large organizations are more vulnerable towards non-compliance, especially when they have large transactions and multiple projects that they are going. So, internal audit would help the organization to monitor the compliance with rules and regulations. They review the organization's compliance with the policies and law. They ensure that the correct applications of the organization's policies and procedures are being undergone, and they pay attention towards the new laws and changes in corporate climate, not only the changes that are made by the government but also changes made by the professional bodies. And thirdly, internal auditors also ensure efficiency and strong internal control for the organizations, which is very important, especially for large organizations. They identify also the operating inefficiencies. They will always and constantly figure out ways to improve business operations and efficiency. They would determine the improvement areas and actions to be taken, and they develop recommendations and reassurance to the organizations after conducting the analysis towards the areas that could be improved and actions that could be taken, and they would present those recommendations to the board of the organizations. And lastly, internal auditors also provide useful insights and suggestions to organizations. They always ensure that the organizations are taking the right path. They ensure that the organization has the proper ability to take on new projects. They ensure that they have the sufficient resources and also funds when they are taking on a new event or venture or project. And internal auditors also help to monitor, analyze and assess all the risks that are exposed, ensure that the path that the organizations are taking towards their organizational goal are being achieved by overcoming all the risks that the organizations are facing. And internal auditors also gather useful information on projects. They provide broader perspective to the organizations, especially during their merger and acquisitions and technology implementations, which would require bigger resources, bigger funds, and greater risk. And therefore, the internal audits are there to help the organization to overcome those problems and those risks and provide recommendations and reassurance to the organization to ensure that they are achieving their organizational goal.
Next, we are going to talking about, can the internal audit fail? Yes, definitely is yes. And the reasons why internal audit fails are recruitment of inefficient audit personnel with insufficient knowledge, organizations fail to arrange training or workshop, lack of competent reporting authority such as the board, audit committee, and management, lack of standard operating procedures, complex work environment, insufficient attention by top management, and the last is low budget and baseless appraisal. The organizations which have experienced internal audit failure include of Enron, Qualcomm, Toshiba, Waste Management, and Tyco. The analysis of internal audit failure in Enron and CFO was exempt from a conflict of interest policy, and inside setting over SPE were assigned. Financial official lack of sufficient knowledge, and internal control buttons were insufficient. For Qualcomm, the analysis of internal audit failure include of audit committee failed to meet with the internal auditors, limit personnel in the internal audit department, lack of independence confirmation, limit access to the financial statement, and unclear work scope. For Toshiba, the analysis of internal audit failure are lacking of professional skepticism, independence confirmations, sufficient audit planning, and the last is lacking of conducting accounting audit services, also called as insurance service. If internal audits fails, what can the organizations do? The following are the ways that organizations can do. Make sure that an experienced audit professional involved at the recruitment process to recruit knowledgeable audit personnel. Arrange training or workshop. Internal audit have clearly defined terms of reference that clear the scope of its work. Make sure experienced, knowledgeable finance and audit professionals are involved in the board, audit committee, and management, and their involvement in setting the scope of work in the internal audit plan. Establish a good corporate culture. Provide scope to perform additional insurance of benefit to the board, management, and the audit committee. Make sure that internal audit is independent and have unrestricted access to all areas of the organizations. Review and approve internal audit policy by the board, audit committee, and management. And the last is allowed a good budget for internal audit and appraise performance. This is all for our group. Thank you.